Next, importance of bank in Indian national economy. The point number 1, creation of money. The creation of money is the unique features of commercial banks and is for great economic significance. Banks have become significant by their power to creation of money. Bank money form a large part of total quantities of money supply and represent a efficient and economic means of payment. Means the creation of money means the important concept of banking can mobilizing a public deposits. Even though the RBI can issuing a notes means currency. In the system of activity, the character it become completely unique. Even though the RBI is only a monopoly characteristics of issuing of note. That's why the creation of activity it become one of the unique characteristics of the bank. Point number 2, strength and link between the organizations and unorganized sector. Indian money market consists of organized and organized sectors. Both of them are to be linked for the economy, well-being of countries. As the system of economy, the bank link organized and unorganized sector for overall economic developments. The concept of bank it can connecting organized and unorganized activities in an economic system. Then point number 3, development of entrepreneur. The bank have special drive and specific scheme for the development of entrepreneurship. The foster and strength and health. This helps to a nation as whole in various way, including the increases in productivity, etc. Means the bank can encouraging entrepreneurship activities in economic system. Means it can encouraging to start a new business. It will be start for a new business. It will be creating a new employment opportunities and a new business systems. That's why it become important role of the banking. Then regulation of the flow of national savings. The bank regulate the flow of national savings into various productive channels. While lending money, they discriminate between a genuine trade and a speculator, and they're discouraging the speculators. Those banks ensure the diversion of national savings into the productivity savings. Means the concept of bank it can playing an important role to regularize of the flow of national savings. Means that concept of savings it will be channelized to a productive sectors only. Then next point, comprehensive infrastructure facilities. Bank can develop a comprehensive infrastructure facilities in the country. It includes the social, educational, fiscal and other aspects whose development is essential for economic progress of the nations. Bank it can providing a proper infrastructure facility to the social welfare activities and education system of activities and fiscal activities and other aspects. Means overall economic development activities, that the way it will be developing an infrastructure facilities. Then effect of trade cycle. The inflation and deflations are known as trade cycle of the economy. There should be controlled, otherwise they will affect on economy of the country. Through effective banking system, the government can controlling, regulating the circumstances of money and thereby the effects of trade cycle in the economy. Means the concept of banking, it can maintaining the inflation and deflation situation in economic situations. It will be creating an inflations, it will be avoiding to reconstructing of a monetary policies and different ways of credit policies. It will be a control, and it will be a deflation situations, it will be following other concept of system. It will be way to avoiding the concept of unnecessary things. Then social priorities, it will be providing a proper system of channel to utilization of effective money system, and it mobilizing a proper resources to a productive activities. It will be providing a proper system of productive activities. It will be encouraging to the industrial developmental activities. Next point, modernizations and innovations. The modernizations and innovations are the essentials and prerequisites for progress of any economy. They are mostly financed by bank credit in the developed economies. Means the concept of banking, it can encouraging a modernizations and innovation systems of activities like technologies, a new system of banking services, a banking activities in industries and commerce and trade. That the way of activities, it will be changes our nature and practice of system in a business. Next, structure of Indian banking system. The structure of Indian banking system, the first main important structure, it become RBI. The RBI means it become an affects bank. The affects bank means it can take a main and important decisions. All other banks can following the RBI rules and regulations. No one should be questioned RBI rules and regulations anywhere. That's why RBI, it become an affects bank, that become the main bank of India. Like a Supreme Court. Supreme Court, it become the main court in India. No one should be questioning a Supreme Court judgment. The same way, in like RBI, it become an affects bank of India. The structure of RBI divided into three parts. Part number 1, scheduled bank. Part number 2, non-scheduled banks. Part number 3, development banks. After the scheduled banks subdivided into two parts, commercial bank and cooperative banks. After that, commercial banks divided into 4 subdivisions: public sector bank, private sector bank, foreign bank and regional rural bank. Then non-scheduled banks. The third one, development banks, divided into 4 sub-points: Industrial Development Bank, Exim Bank, National Bank of Agriculture and Rural Development Bank and National Housing Bank. Then RBI, first one. The Reserve Bank of India is Indian Central Bank and regulatory body under the jurisdictions of Ministry of Finance, Government of India. It is responsible for the issue of supply of Indian rupee and regulation of the Indian banking system. It also manages the country's main payment system and work to promote its economic developments. Then Schedules Bank. Scheduled bank in India refers to those banks which have been included in the second schedule of Reserve Bank of Indian Act 1934. RBI intend to include only those banks in this schedule which satisfy the criteria laid down the section 46 subsection 6 subsection A of the said act. Every scheduled bank enjoys two types of principal facilities. It becomes eligible for debit loans at the bank rate from the RBI, and it automatically acquires the membership of clearing house. The scheduled bank means that bank it will be named under second schedule of Reserve Bank of Indian Act 1934, subsection 46, subsection 6, subsection A. Under that first bank it become commercial bank. Commercial bank in India are the backbone of all major economic activities in the country. Whether it is for a citizen to keep their hard earning money, safety, or get loan whenever they needed funds for important things like a home, vending, a car, or for a businesses. The primary functions: accepting deposit, advancing loan; secondary functions: overdraft facilities, discounting bills of exchange; agency functions; general utility functions. Under that, the next bank, public sector bank. Public sector banks are those banks which are owned and controlled by the government. All the nationalized banks and regional rural banks are public sector's bank. These banks or the nationalized banks undertaken by the government of India in way or the other nationalized bank account for over 75% of the overall business transactions that happen in the country. Example: State Bank of India, Bank of Baroda, Bank of Maharashtra, Union Bank of India. The next, private sector bank. These banks are owned and controlled by private institutions or individuals and not by the government. Private sector banks are ones that work on similar line as the nationalized bank. The only difference is that the major stakes in these banks are privately owned, as in the major stake in the equity are owned by private stakeholders or business houses. These banks majorly work on the lines of profit making by keeping deposit, providing loans and other products related to financial activities. Example: Hindustan Bank, ICICI Bank, HDFC Bank, etc. Then next point, foreign banks. A foreign bank is a bank having its headquarters outside the country but run its office as a private entity at any other location outside the countries. The bank may have as many branches and offices they find suitable. They are under obligation to operate under the regulations provided by the central bank of the country as well as rural prescribed by the present organizations located outside India. For example, JP Morgan, Citibank, HSBC Bank, etc. The fourth bank, regional rural bank. Regional rural bank were established by Regional Rural Bank Act 1976 with view to satisfy the banking facilities and credit needs of the rural people. The main objectives behind the formation of such bank is to provide credit support to the economy, weaker sections of the society like farmer, rural traders, small business owners. This rural bank work on specific lines and serve major functions like providing financial credit, support to the rural and semi-urban area, provide support for government scheme by processing payment for the national pension scheme. These banks are considered no less as compared to the nationalized bank. The next, cooperative banks. Cooperative banks is an institution established on the cooperative basis and dealing in ordinary banking business like other banks. The cooperative banks are funded by collecting funds through shares, accepting deposit and grants loan. These are the bank where cooperative societies that are formed at the state or district level have a share of more than 51%. These are primarily set off for the purpose of service the farming communities or aims in land of infrastructure developments at the state and district level. The cooperative bank divided into three subdivisions. First one, state cooperative bank. Second one, district cooperative bank. Third one, primary credit society. The state cooperative bank, it is a federation of central cooperative bank and act as a regulatory. They obtain their funds from the share capital, deposits, loans and overdrafts from the Reserve Bank of India and can lend money to central cooperative banks and primary societies and not directly to the farmer. They provide a link through which the Reserve Bank of India provides credit to the cooperatives and those participate in the rural finance. For example, the Karnataka State Cooperative Affairs Bank Limited. The next one, District Cooperative Bank. A District Cooperative Central Bank DCCB is a cooperative bank operating at the district level in the various parts of India. It was established to provide a banking to the rural lands for the agricultural sector, with the branches primarily established in rural and semi-urban area. For example, Mysore and Chamarajanagar District Cooperative Bank. The Primary Credit Society. The Primary Cooperative Credit Society is an association of borrowers and non-borrowers residing in a locality. The fund of the society are derived from the share capital and deposit of the members and loans from the central cooperative banks. The borrowing power of the member as well as of the society are fixed. The loans are given to the members for the purchase of fodder, fertilizers, etc. For example, Primary Agricultural Credit Society in Karnataka. The next, non-scheduled bank. A non-scheduled bank by defined are those which are not listed in the second schedule of RBI Act 1934. Banks with a reserve capital of less than 5 lakh rupees qualifies as non-scheduled banks. Unlike scheduled banks, they are not entitled to borrow from the RBI for national banking purpose, except in emergency or abnormal circumstances. Jammu and Kashmir Bank is an example of non-scheduled commercial bank. The next, development bank. A development bank is a financial institution concerned with providing all type of financial assistance, medium as well as long-term business units. Industrial Development Bank, it is established 1st July 1964 to provide financial assistance to industrial enterprises, to promote institute engaged in industrial development, to provide technical and administrative assistance for promoting management or exceptions of industries, to undertake market investment research and survey in connection with development industries. Export and Import Bank. It was established in 1st January 1982, planning, promoting and developing export and import and providing technical, administrative and managerial assistance for promotions, management and expansion of export, undertaking market, investment, survey and techno-economic study related to development of export of goods and services. National Bank of Agriculture and Rural Development (NABARD) is an affects regulatory body for overall regulations and licensing of regional rural bank and affects cooperative banks in India. It was established in the year 1982. It is under the jurisdictions of Ministry of Finance, Government of India. The bank has been entrusted with the matters concerning policy, planning and cooperations in the field of credit for agriculture and other economic activities in rural area in India. NABARD is an active in developing and implementing financial inclusions. Next, types of banks.